Thank you so much to our witnesses for joining us. Since Vice Chair Barr and FDIC Chair Gruenberg last testified in front of this committee, as we all know, another bank has collapsed, so that's three bank failures this year. And the Federal Reserve's report on the collapse of SVB underscores that bank executives committed quote unquote textbook failures in managing interest rate risk, and regulators failed to understand the depth of the problem and to react appropriately. Now, certainly, the 2008 financial crisis gave us all a front row seat. The entire nation learned in that moment that we cannot solely rely on the decision-making of executives to ensure systemic stability. So this is not a new issue. This is no epiphany here. Chair Gruenberg, as you well know, and I want the public to know, that banks are subsidized by the government through the Deposit Insurance Fund and their access to the Fed's liquidity backup facilities. Banks perform what is essentially a delegated public responsibility, including providing transactional accounts, operating payment systems, and serving as channels of monetary policy. So, Chair Gruenberg, bearing this in mind, would it be fair to say that banks operate similarly to a public-private partnership?
It's an interesting, they certainly have a public charter and a set of public responsibilities that comes with their charter and the provision of public support, and that is also why they incur the obligations relating to both supervision for safety and soundness, as well as consumer protection and community reinvestment.
Very good, thank you. I think it's an accurate characterization. However, it is a skewed public-private partnership because the profits are enjoyed by the private bank, but the losses are borne by the public. So for too long, banks have been content really to chase profits irresponsibly and then to turn to the government to bear the risk when they collapse. If the American public is going to suffer the consequences of poor corporate governance, then maybe it's time for the American public to have a seat at the table. One proposal that would do exactly that is to give the government a special government share, or what some would call a golden share. The way it will work is simple. The federal government would receive a unique share in large banks that are considered systemically important, which would allow for a government-appointed director to join the bank's board and be responsible for representing the public interest. Now, under normal circumstances, the director would keep an eye on proceedings and not interfere with the day-to-day affairs. But when credible concerns arise that the bank is mismanaging its risk and threatening our economy, then the director can act as an early warning, early action system to prevent a potential crisis. So, Vice Chair Barr, it's my opinion having a government-appointed director at SVB could have helped to avoid the now obvious mistakes and errors and repeat of history here. Do you agree that a board member with a unique public mandate would support around remedial measures, early intervention, and then the director would have been more ideally positioned to spot and flag the problems with unhedged interest rate risk and over-reliance on wholesale deposits that the executives were willing to ignore?
The system we have for that now is that the board of directors has that responsibility. They are required to oversee the management of the firm in a way that takes into account appropriate risk management. And the board, in this case, failed to do that. The senior officers of the bank also failed to appropriately manage their risks. And as we outlined in our report, the supervisors called out those risks, cited them for the risks,
I'm sorry.
but did not.
The time is elapsing. I'm so sorry. So actually, I don't apologize. I'm just going to reclaim my time. And you said fail there several times, and I think that's the point, is that we don't want this to happen again. The swift government intervention to ensure all deposits and prevent a systemic crisis showed us once again that the profitable business of banking is deeply intertwined with public interest. So the golden share proposal would allow an appointee on the board of large banks to safeguard the public interest. The reoccurring bank failures demonstrate that bank executives are not making decisions in the best interest of the people. The American people deserve a seat at the table. Thank you.